everyone, and welcome to the Retirement Wealth Podcast. We're so glad you're joining us today.
It's great to be here, Emily. You know, as folks plan for retirement, one thing that often gets overlooked is how Medicare costs can really impact their budget.
Absolutely, David. It's such a crucial topic. A lot of people think Medicare will cover all their health expenses, but there are some hidden costs that can surprise them.
Right, and understanding these costs is key. It helps in creating a more realistic retirement budget.
So what are we diving into today?
Well, we're going to explore how Medicare works, the different parts of the program, and what kind of expenses you should be planning for.
And we'll also touch on some strategies to manage those costs, so you can enjoy your retirement without financial stress.
That's the goal, isn't it? To make sure our listeners feel prepared and confident in their retirement planning.
Exactly. So let's get started on this important journey of understanding Medicare costs and how they fit into your overall retirement budget.
Sounds good, Emily. Let's break it down for everyone. You know, Emily, when we talk about Medicare costs and how they fit into retirement budgets, it really feels more pressing than ever. I mean, with so many people nearing retirement age, they're facing a unique set of challenges right now.
Absolutely, David. I think a lot of folks don't realize just how crucial it is to plan for these healthcare costs, especially with rising inflation making everything more expensive.
Right, and let's not forget about market volatility that can really shake up a retirement plan. If someone's portfolio takes a hit, suddenly they have less to draw from, which makes those Medicare costs feel even heavier.
Exactly. And it's not just about the costs themselves. It's also about what those costs mean for their overall financial picture. I had a conversation with a couple last week. They're in their early 60s, and they're really worried about how much they'll have to set aside for healthcare.
That's a common concern. I mean, one of the partners mentioned they were already budgeting about $500 a month for Medicare premiums, but then there are the out-of-pocket expenses. It adds up quickly.
Yeah, and with the current economic trends, those expenses can feel unpredictable. I've read that average healthcare costs in retirement can be around $300,000, and that's just for someone who's healthy.
You're right, and it's not just the costs. It's also the emotional side of it. A lot of people feel anxious when they think about their health in retirement. What if something unexpected happens?
That uncertainty can definitely weigh heavily on people's minds. I think that's why planning becomes so critical. They want to feel secure, not just financially, but also emotionally.
Exactly. And when we factor in changes to Social Security, that can really impact their retirement timeline. If they're planning to rely on those benefits, they need to understand how Medicare fits into that picture.
Speaking of Social Security, I read a statistic recently that nearly half of retirees are dependent on it for 90% of their income. That's a startling figure. If Medicare costs rise and their Social Security doesn't keep pace, it can really create a financial strain.
Yes, and one thing that many don't consider is how tax efficiency will play into this. If they're withdrawing more to cover those healthcare costs, it could push them into a higher tax bracket, which, just compounds the problem.
Right, and we haven't even touched on the fact that many retirees want to leave a legacy. If they're not careful with their healthcare spending, they might find there's not much left to pass on to their loved ones.
It's true. I've had clients who've worked their entire lives, saving diligently, only to feel like their healthcare costs are eating away at their hard-earned savings. It's disheartening.
It really is. And then, when you look at the current inflation rates, it adds another layer of stress. People need to make sure their retirement budget hasn't just accounted for today's prices, but also future increases.
Spot on. One client, a retired teacher, told me she thought she'd be fine with her savings. But when we ran the numbers with projected inflation, she realized she might need to adjust her spending, or even consider part-time work to cover those extra costs.
That's a great example of how important it is to look ahead. It can feel daunting, but just having that awareness can lead to better decision-making.
Absolutely, and I think a lot of people underestimate how proactive they can be with their healthcare planning. It's not just about reacting to what's happening. It's about anticipating and preparing.
Yes! And for those listening, it's never too late to start thinking about these things. Whether you're just starting to plan or you're already retired, understanding how Medicare and healthcare costs fit into your financial landscape is key.
And I think, too, it's about creating a comprehensive plan that considers all these factors: retirement timelines, inflation, market volatility, everything working together, you know?
Right. And sometimes just having those conversations can help ease some of that anxiety. People often feel isolated in their worries, but when they share their experiences, it can create community and support.
Exactly. It's a shared journey for many, and understanding that you're not alone can make a big difference. Plus, having a solid plan can really help to mitigate those emotional stresses.
So true. And for those who might be hesitant to dive into this, I'd encourage them to reach out for guidance, whether that's through a financial advisor or community resources. The sooner you start, the better off you'll be.
Well said, Emily. It's all about empowerment through knowledge and planning. And, as we start to look at some strategies to address these Medicare costs.
Yes, let's dive into those strategies next.
So, Emily, when we talk about Medicare costs, we really need to consider how they fit into the overall retirement budget, right?
Absolutely, David. A lot of folks don't realize how much Medicare can impact their finances. It's not just the premiums. There are also deductibles, copays, and maybe even costs for additional coverage, like Medigap or Medicare Advantage plans.
Exactly. Let's break it down a bit. For most people, the standard Part B premium is around $164.90 per month as of 2023. But if your income is above a certain threshold, you could pay significantly more.
Right, that income-related monthly adjustment amount, or IRMAA, can add quite a bit to those costs. It's essential to plan for that, especially if you're living on a fixed income.
And that's where having a solid financial plan comes in. Incorporating things like Social Security optimization and understanding your withdrawal strategies can help ensure you're covering those Medicare costs without straining your budget.
Speaking of withdrawal strategies, I know many people rely on the 4% rule. Can you explain how that fits into planning for Medicare expenses?
Sure. The 4% rule suggests that you withdraw 4% of your retirement savings each year, adjusted for inflation, to help ensure your money lasts through retirement. So if you've got, say, $1 million saved, that would mean an annual withdrawal of $40,000. But you need to account for your healthcare costs, like Medicare, in that figure.
Makes sense. So if someone is looking at an average of, say, $5,000 a year for Medicare premiums and out-of-pocket costs, that should be factored into that $40,000 withdrawal?
Exactly. It's crucial to think about it in those terms. You might need to adjust your withdrawal rate if healthcare costs are higher than anticipated. And remember, those costs can increase over time as you age.
And that's why diversification is key. Right? Having a mix of income sources can help manage those rising costs?
Definitely. Diversifying across stocks, bonds, and even tax-advantaged accounts like 401ks or IRAs can provide a balance. You want to ensure you have some growth potential, but also stability as you transition into retirement.
Speaking of tax-advantaged accounts, how do Roth IRAs play into this?
Great question. With a Roth IRA, your withdrawals in retirement are tax-free, which can be a significant advantage. If you expect your Medicare cost to increase and you want to avoid higher tax brackets later, having that tax-free income can really help.
So if someone has a mix of traditional IRAs and Roth IRAs, they can choose which to withdraw from based on their current tax situation and Medicare costs.
Exactly. It gives you flexibility. You can strategically withdraw from your accounts to minimize taxes and manage your Medicare premiums.
I love that idea. It's like having a toolkit at your disposal. But let's not forget about real estate. How does that play into the picture?
Real estate can be a fantastic asset in retirement. If you own your home outright, that's one less monthly expense. Plus, if you downsize or move to a less expensive area, you could free up some cash to bolster your retirement savings.
And then there's the option to consider rental properties, right?
Absolutely. Rental properties can provide a steady income stream, which can help cover those Medicare costs as well. Just be sure to factor in potential maintenance costs and vacancies into your calculations.
Right, and that's where having a solid asset allocation strategy comes into play.
Correct. A common rule of thumb is the 70-30th portfolio, where you might allocate 70% to stocks for growth and 30% to bonds for stability. Adjusting that based on your risk tolerance and time horizon is key too.
And we can't forget about the importance of tax savings techniques.
Yes. For example, If you're still working part-time in retirement, you might want to consider how that income affects your Medicare premiums. Some folks don't realize that additional income can push them into a higher premium bracket.
That's a good point. It's all about being proactive, isn't it?
Exactly. Planning ahead for potential income and healthcare costs can make a huge difference. It's like looking at the bigger picture and not just the immediate numbers.
So, David, what about those common pitfalls we should be aware of when planning for Medicare costs in retirement?
Well, one big pitfall is underestimating healthcare costs. Many people think Medicare will cover everything, but there are still many out-of-pocket expenses that can add up quickly.
Yes, and it's also easy to overlook the impact of inflation on those costs, right?
Absolutely. Healthcare inflation tends to outpace regular inflation, so it's wise to expect that your Medicare-related expenses will grow over time.
And then there's the risk of not having a comprehensive plan that includes all income sources and potential tax implications.
Exactly. If you're not considering how your various income streams interact, you might end up paying more in taxes or missing out on benefits. It's all interconnected.
Wow, there's just so much to consider. It really highlights the importance of working with a financial advisor who understands all these nuances.
Definitely. Having that expertise can help you navigate the complexities of retirement planning, especially when it comes to something as critical as healthcare costs.
I think our listeners will appreciate these insights, David. It's all about being informed and prepared, right?
Right. That preparation can lead to a more secure and enjoyable retirement, free from financial stress. So, Emily, one of the big pitfalls we see with retirees is the sequence of returns risk. You know, it's that situation where you might have great long-term returns, but if those early years in retirement have a downturn, it can really mess with your plans.
Absolutely. It's like you could be doing everything right, but if you hit a rough patch right when you start withdrawing from your investments, it can derail your whole plan, right?
Exactly. I had a client, let's call him Tom. He was pretty confident about his retirement portfolio, but he started withdrawing money during a market dip right after he retired. His investments took a hit, and he was forced to sell shares at a loss, which really hurt his long-term strategy.
That sounds tough. So what did Tom do next?
Well, he had to reevaluate his withdrawal strategy. We had to sit down and look at a more sustainable way to draw from his assets considering the market's fluctuations. It's a tough lesson, but one that a lot of retirees face.
I think that's so important for people to understand how crucial it is to have a solid withdrawal plan in place. It's not just about picking the right investments, but knowing when to take money from them, right?
Right. And another common mistake is ignoring taxes when planning withdrawals. A lot of folks don't take into account how their withdrawals can impact their tax situation.
Oh yeah, tax implications can really add up. I've seen people who thought they were being smart by withdrawing from their traditional IRA, but then they end up in a higher tax bracket.
Exactly. I had a couple, let's call them Jerry and Susan. They were pulling money from their retirement accounts without considering the tax consequences and ended up paying significantly more in taxes than they anticipated, which ate into their retirement income.
Ouch. That's a hard lesson to learn. So what do you suggest for someone who might be in that situation?
First, it's important to have a tax-efficient withdrawal strategy. Look at how your income will be taxed based on your withdrawals, and consider the order in which you take money from your accounts. Sometimes it makes sense to draw from taxable accounts first, then tax-deferred, and lastly tax-free accounts like Roth IRAs.
That's a really smart approach. And what about healthcare costs? I feel like that's something people really underestimate.
Absolutely. Healthcare expenses can be a huge surprise in retirement. I can't tell you how many times I've seen retirees plan for everything but their healthcare costs.
Right. So many people think, oh, I have Medicare, I'm covered, but they don't realize there are premiums, deductibles, and out-of-pocket expenses to factor in.
Correct. I recall a client, we'll call her Linda. She thought her Medicare coverage would be enough, but when she started needing more specialized care, her expenses skyrocketed. She hadn't budgeted for those costs, and it put a strain on her finances.
That's a real eye-opener. So how can someone avoid that pitfall?
It's crucial to budget for healthcare costs, including potential long-term care. It's wise to research what Medicare covers and what it doesn't. Also, consider supplemental insurance options to help cover those additional expenses.
And of course, longevity is a factor too. People are living longer these days, which can really affect retirement planning.
Definitely. Many retirees underestimate how long they'll need their savings to last. I had a couple, let's call them Mike and Karen. They planned for a 20-year retirement, but after they hit their 70s, they realized they were in great health and could be looking at 30 years or more.
Wow, that's a big difference. So what happened with their plan?
They had to adjust their spending habits and their investment strategy. We shifted some of their assets into more growth-oriented investments to help sustain their income over a longer period. But it was a wake-up call for them, for sure.
It really shows how important it is to have flexibility in your retirement plan. And then there's asset allocation. We can't overlook that.
Right. Poor asset allocation can lead to significant problems. Many retirees stick to overly conservative investments, thinking it's safer, but that can hurt them in the long run.
I've seen that too. People tend to think they should move everything to cash when they retire, not realizing they might miss out on growth opportunities.
Exactly. I had a client, let's call him Bill. He was so worried about market fluctuations that he moved almost everything to cash right before retiring. He lost out on a lot of potential growth in those early retirement years, which could have provided him with a much larger nest egg.
That's a tough spot to be in. So what's the key takeaway for someone looking to avoid that mistake?
It's all about finding the right balance. Diversifying your investments based on your risk tolerance and time horizon is crucial. You want enough growth to keep pace with inflation while still having some safer options.
And then there's Social Security. Claiming too early can really impact your benefits.
Absolutely. I had a client, let's call her Sarah. She claimed her Social Security benefits at 62, thinking it was the best choice. But when she turned 70, she realized she would have received a much higher monthly benefit if she'd waited.
That's a common mistake, isn't it? So what do you recommend?
It's important to evaluate your personal situation and consider factors like your health, your need for income, and your other assets before deciding when to claim. Sometimes, waiting can lead to a much larger benefit over time.
Such great insights, David. So if someone is recognizing these red flags in their own planning, what's the first step they should take?
Well, the first step is to take a deep breath and reassess your plan. Look at your budget, your withdrawals, and your healthcare costs. Don't hesitate to consult with a financial advisor to help you navigate these complexities.
That's solid advice. It's all about being proactive and making informed choices to set yourself up for a secure retirement.
Definitely. And remember, it's never too late to adjust your plan and ensure you're on the right track.
Great points, David. Thank you for sharing all this valuable information today.
All right, Emily, so let's dive into some actionable steps that our listeners can take right now to better prepare their retirement budgets, especially when it comes to those Medicare costs.
Absolutely, David. I think starting with a solid understanding of Medicare is key. So where should folks begin?
Well, first off, I'd recommend checking out Medicare.gov. It's got a wealth of information about the different parts of Medicare, A, B, C, and D, and how they impact costs. Understanding these can really help in budgeting for healthcare expenses.
Right. And for those who want to dig a bit deeper, they can also look at SSA.gov. That site is super helpful for understanding Social Security benefits, which often tie into overall retirement planning.
Exactly. And speaking of finances, if listeners haven't already, they should definitely utilize retirement calculators. Websites like Vanguard, Fidelity, or Schwab have fantastic tools that can help you project your retirement income and expenses, factoring in those Medicare costs.
Those calculators can be such a game changer. They allow you to see how different variables, like your retirement age or savings rate, will affect your overall financial picture, right?
Yes, and it's important to run these projections regularly, Even quarterly reviews of your portfolio can help you stay on track. It's a simple habit that can yield significant benefits.
I love that idea. Just a small commitment to review your portfolio can really help you catch any issues early. What about tax implications? Any tools you'd suggest for that?
Great point. Using tax software like TurboTax or H&R Block can help you navigate the tax landscape as you transition into retirement. Understanding how your withdrawals will be taxed is crucial, especially with Medicare premiums tied to your income.
That's a really important consideration. And I think it's also worth mentioning that there are financial planning apps out there that can help manage and visualize your retirement goals.
Absolutely. Apps like Personal Capital or Mint can help you track your expenses and investments in real time. They're quite user-friendly and can provide insights that might not be immediately obvious.
For sure. And if listeners are looking for more in-depth knowledge, I'd recommend checking out some books or podcasts focused on retirement planning.
Yes, there are some fantastic resources out there. The Total Money Makeover by Dave Ramsey is a great read. And for a podcast, The Retirement Answer Man by Roger Whitney offers loads of practical advice.
Those are excellent recommendations, David. It's all about building that knowledge base, right?
Exactly. And remember, it's never too late to improve your plan. Even small steps, like setting aside a little extra for healthcare or adjusting your investment strategy, can go a long way.
Speaking of small steps, what about habits? Any daily or weekly practices you think would be beneficial?
Well, I'd suggest starting a habit of reviewing your healthcare expenses regularly. Just keeping track of what you're spending can help you identify areas to cut back or adjust your budget.
That makes sense. And it might also be helpful to start having those conversations with a financial advisor, especially if you're nearing retirement age.
Definitely. Having a professional guide you through the complexities of Medicare and retirement planning can make a big difference. It's about making sure you're not leaving any money on the table.
Right. And for those who might feel overwhelmed, just remember, taking it one step at a time is perfectly fine.
Exactly. Just get started. Maybe set a goal to review your Medicare options and costs by the end of the month. Small, manageable goals can lead to big changes over time.
That's such a good point, David. And as they start to put these tools and strategies into action, it will help them feel more confident about their retirement plans.
So those are some practical first steps. Now let's bring this all together. Well, Emily, as we wrap things up today, it's clear that understanding how Medicare costs can impact your retirement budget is really crucial.
Absolutely, David. I mean, we talked about how premiums can vary based on income, right? It's important for folks to know that planning for those costs can really help avoid surprises down the line.
Right, and we also touched on the out-of-pocket expenses, which can add up. It's so key to have a solid strategy in place for those potential costs.
And don't forget about the prescription drug coverage. That can really influence overall spending in retirement. Choosing the right plan can save a lot of money.
Exactly. And we highlighted the importance of reviewing your Medicare options regularly. It's not just a one-and-done situation, folks. Life changes, and so do your needs.
So to sum it up, understanding premiums, preparing for out-of-pocket expenses, carefully selecting drug coverage, and regularly reviewing your plan are all vital steps.
And, it's all part of building and protecting your retirement wealth. It's not just about saving. It's about making your money work for you and ensuring you can enjoy your retirement years to the fullest.
Yeah. And if you found today's episode helpful, don't forget to like, subscribe, and leave a comment with your biggest takeaway or any questions you might have.
And sharing this episode with someone who's planning for or already in retirement can really help them too. We're all in this together.
Next time, we'll dive into how to achieve financial independence faster. That's going to be an exciting discussion, so you won't want to miss it.
Absolutely. We'll see you then.
Take care, everyone.
Bye for now.